Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the new month of October. Good evening, Rob. How's everything?
Not too bad. Let's go through some good stuff here today.
Yeah.
I'll just start off with what is happening in the indices at the moment. So I found it interesting because when we first opened, so I got to actually back up to Friday. So we all know that we kind of closed near the low on Friday, right? Like almost on the low. After hours, it just bounced a little bit. And then when the futures opened today at 6 p.m. Eastern, 3 p.m. Pacific time, they were dropped a little bit, and then they rallied, filled that gap, and proceeded to trade sideways, and then gave it up quite a bit from there, and they're trying to come back. So there's kind of real battleground. I mean, I checked about 20 minutes earlier and everything was red, and now the Dow Jones futures are up 55 points, up 0.19%. S&P, same kind of trading behavior. It's up only a point, and that's 0.03%. NASDAQ 100 is still down 30.25 or 0.27%. And the Russell, which was up earlier, even when the other ones were down, is up 4.4, up 0.26%. So Russell's been holding up a little better, and that's been interesting for a good part of September actually. And this happened last year too, where small caps were doing pretty well through September. And that was when we were starting. Do you remember we were getting the inflation banter? And kind of things were kind of getting messed up a little bit. Like we had the Connors, one of our indicators that we were curating for quite a few times throughout the year. And it was working really good in the summer. And then it's kind of stopped working in September. And we started to see that RSI and other things were just much superior to the Connors. But at that time, the small caps were performing better, and we see kind of a repeat of that this month. And last week, it was quite noticeable where the market was heading down and the small caps were many of them were heading up, especially the ones that we curated with good odds and stuff. So IWM might have still been down, but the better picks of the Russell were up. So why? I got a question from one of our traders that said, well, why is this? And I tried to respond by what I think, and that is that we're leaning on the mature, kind of like have runs, have beens, things like Meta, for example. We kind of have more understanding about the story and where they're losing traction and what the obstacles with the metaverse are and things like that. And we're seeing advertising get reduced and people moving off platform and other challenges with things about social media in general. And so we're seeing it kind of lose traction, and so people are leaning on things like that. That's just one example. They're shorting that, and they're buying as an arbitrage some of the smaller caps that might. There's a couple different angles. Some have no debt. Some have pretty low PEs too. Some have, small market caps, maybe some high short interest, and there's just room for explosive moves up. There's room for growth. There's whatever. So there seems to be a lack of wanting to get completely out of the market and abandon everything, and more of a posturing to sort of like put yourself in some of the small caps, but have a hedge. And IWM is not a perfect hedge for all the small caps, because when you curate lists for the Russell, a lot of the times it's biotechs, right? A lot of times the stocks that come up, are real small biotech opportunities, which are kind of risky, but you just end up with a majority of that, or some small oil companies or whatever. But I think that's what's going on, is the shorting of other things against the small caps. We used to do this with pair trades a lot. Would be, you'd be short Caterpillar and you'd find some small cap, industrial that just had explosive potential, and you would put it on as a pair, and you kind of had this free built-in call option. That means that you might be just trading the rolls and the production and the oscillation of this relationship, and then one day Caterpillar buys the company that you're long, or some other Deere buys the company you're long, or Cummins buys the company you're long. You know what I mean?
Yeah.
So I think that's what's going on a pretty large scale, from what I can tell. That doesn't mean you're going to have beautiful, flowers and butterflies and everything all the time. You're going to have some really bad days where it's completely risk off, or the small caps had run so much, it's like, well, time to take some profit. And once they start heading south, and the sentiment changes a bit, that you really have a bad day. It'd be like, down 3%, down 4%, down 5% kind of thing. But I hope that helps. There's a lot of opportunity in the small caps, and they are more volatile, they are more risky, and they have been performing really well. And even tonight, as I said, Russell was up when the other indices were down. So that being said, let's talk about Russia situation. So there's been the Tu-160s and Tu-95 strategic bombers that have been moved to the Olena Air Base. It's on a peninsula, and that's where tactical and nuclear weapons are housed. So we saw this before they ever came into Ukraine. Is they assembled on the border and near the border, lots of tanks and other military vehicles. And then finally they did come in. So they've moved these strategic bombers to an air base that wasn't previously housing them. Then you have the K-324, I think it is, or 327 or something. It's a Belgorod submarine. It's been deployed, and it houses the Poseidon nuclear missile. So that has now been deployed. It's out there. So what does this mean? Does this mean that that something is actually being planned, or does it mean that it's part of the bluffing and scare tactics? It could be a complete distraction, like all this banter about nuclear from, for people in his cabinet and even other actor nations say, why not do it, kind of thing. It could be just a distraction where something else is actually up. And there was this interesting article on Zero Hedge, which was talking about gold and geopolitics. And I wanted to get into gold anyway, so that's what attracted me to that. And basically, I'll just read it to you. You can go look it for yourself. It's gold and geopolitics. So he says, and the other thing I've been harping on for a while was the dollar. And I said, remember I said it's a very crowded trade?
Yeah.
And, there are obviously a reason defensively to be in the dollar, but it's getting to be an extremely crowded trade. And I'm really concerned about how that has been like everything else I've ever seen since I've started trading. And that is, something goes parabolic, it goes straight up. I used to teach like about the hammerhead move of planes at the air show, when something's going parabolic like that. And then what happens? It turns over and comes back down, right?
Falls out.
And what happens when it does that to all the people that were, in the latter part of that buying? We've seen it even, like look at with Bitcoin over, over 40,000, over 50,000, over 60,000. I mean, even, Michael Saylor himself, ended up with MicroStrategy buying Bitcoin at fairly elevated levels. And now it's kind of stuck down here in the 18 to 20,000, 18 to 21,000 area. Not really managing to head back up, and it may never head back up. So what's happening here with this discussion is that the dollar is understandably the flight to quality, but getting very crowded. So here's what Tyler Durden says on Zero Hedge here. He says, undoubtedly, there are good reasons to get out of other currencies and into dollars, but the dollar's overbought condition must be extreme, exposing it to sudden and sharp bear squeezes. So it can drop pretty quick, and that would impact your trading for the day, right? If you see that. So together with a deeply oversold position for gold and silver, undoubtedly mirrored in a raft of commodities and energy contracts, we can see how traders might become very badly wrong-footed. This is kind of what happened in oil. They were so underexposed to oil that when it started to really rally last year, they had to scramble. I mean, and you saw how quickly it shot from $90 to 100 and then to all the way to 135, right? That area. So he says there are other developments worthy of attention, this time in Russia. Following the referendum in Ukraine, Russia's border marches westwards, and in the absence of a ceasefire, the Ukrainians supported by NATO will be attacking Russia directly. Okay, not Ukraine being a NATO country, but Ukraine supported by NATO countries, meaning they're benefiting from capital, from arms, right, of all kinds. And if they use them, they will be attacking Russia directly. It would bring an escalation into direct conflict between Russia and NATO. Putin probably expects an uneasy ceasefire to follow. And he's got a picture there of him holding a gold brick there. Meanwhile, his attention appears to be turning to monetary and financial matters centered on gold. Together with the Russian central bank's reserves, Russia's state fund and its national wealth fund are believed to hold about 12,000 tons of gold. Steps have been taken to mobilize the non-reserve gold. So it's not just the central bank, but it's its state fund and its national wealth fund. If you put all that together, that's higher than what has typically been reported. Okay, so it's believed to be around 12,000 tons of gold. So this is not emergency war funding as most commentators would think, but more likely so that it can be included in central bank reserves. Russia could then declare the largest monetary gold reserves in the world. Together with the recently announced Moscow gold standard, you and I talked about this on the show before, where they, applied a fraction of an ounce to their ruble, right? And plans for new trade settlement currency to replace the dollar. So this has been bantered about for a long time, is like all the, basket of currencies, or, Russia trading with yuan or whatever directly, or let's circumvent the US dollar and the SWIFT, and let's just trade with each other, all this kind of stuff, right? But this would make it more official and probably more doable. So together with the recently announced Moscow gold standard and plans for a new trade settlement currency to replace the dollar, enhanced gold reserves will provide support for a new gold standard for cross-border trade. it would replace payments to Russia for energy in weak Asian currencies and probably force China to declare its true gold reserves as well. So imagine that. Russia completely backs its currency with gold and declares all of these reserves that may not have previously been declared. China does the same thing. What other countries are sympathetic to China and to Russia that also have gold? The US obviously has gold too, but we believe we know how much is there, but it could be a different story. So if this is Putin's plan, the consequences for Western fiat currencies are likely to be devastating, suffering the financial equivalent of a nuclear attack. Think about that for a minute. So what if the nuclear banter is a distraction?
And then just crush the US dollar.
Because you wouldn't, I mean, you would think, even though he may be crazy, you wouldn't think he'd want to start launching nukes because he's going to receive them, right? But if he can do something else where it's an economic play that nobody sees coming, that could be unbelievable. So anyway, I wanted to put a little bit of emphasis on that because let's talk about metals here for a minute. When you look at the daily chart on gold, especially, you know, it moved down for quite a while now. I'm going to bring up the monthly on gold. Now it's like, you know, it's way higher obviously than it was in 99 to 2008. It's been pretty stable really between 2011 and now. So it's kind of trading right in the middle of that range between the highs of 2011, 2012, and the highs of 2020 to 2022. So, you know, it's not at all-time highs. It's pulled back on the monthly now, 1, 2, 3, 4, 5, 6 months in a row. Silver's done a little bit better recently. But so I would say that, you know, gold on a temporary basis is kind of oversold. And what happens when the large traders are, you know, under committed and the commercials are fully hedged, that's when often you see a reversal and a rally ensues. So we're right at that point now where large traders are underexposed to gold contracts and commercial hedgers are fully hedged. So what happens when it reverses? Well, we have a rally, and that could take us up to test the high and possibly move higher. Now, that is a pretty significant high that we have on the gold futures at 2,078 and 2,089. So in the 2,070 to 2,090 area, that's what I would call resistance. And we spiked up there, obviously, in March of 2022 and back in August of 2020. So we could see a move higher if the US dollar were to pull back. Now, if you had something more catastrophic happen, like we just read, then you would have the dollar falling dramatically, and because gold's priced in US dollars, and especially if it were now sought after for trade and especially to purchase oil, then what would happen? Then gold would become even more and more valuable, right? So there's something going on here, and it could be more economic warfare than people realize.
It's interesting,
right?
Very interesting. Actually, for tomorrow, it's the first day of the month, gold is expected to be a little bit softer, one of the shorter things in terms of the almanac. But the first Friday of the month, it's expected to be one of the better things to be
Yeah, I
involved.
mean, you're not going to see these things turn on the dime, and also we don't have, we can't possibly get odds on chances of a nuclear war, or we can't get odds on the chances of this kind of economic warfare either.
Yeah.
But we can see where we're at, which is deeply discounted in the last, like we just said, 6 months down in a row. And we kind of see the conditions changing where these other banks like Russia's central bank and China have been accumulating more gold. So it's been more important to them than it has been to Western nations. We've kind of despised gold. I mean, it's hard to carry, you can't eat it, blah, blah, blah. So we don't have a great opinion of gold. But there are a lot of countries that still do.
Mm-hmm. But the other thing is, they always say gold is an inflation hedge, and it's gotten killed since the beginning of the year. So it really hasn't held up.
Well, they said that of Bitcoin too, that it would be
Yeah.
an hedge, right? But here's the thing. Let's just say, frame it this way. The dollar, which is backed by good faith in the government, essentially, the dollar has been a flight to quality. It's been a defensive thing, right? So you don't, and it's liquid, and blah, blah, blah. So you don't need gold, right? But if the dollar were to start falling, that gives more of a lift to gold naturally anyway.
Mm-hmm.
But if something more drastic was to happen, then you can imagine that gold would really fly. So you might be able to start trading it, looking at some of the, if you guys want to look at something like Newmont, it's traded sideways, completely sideways here at around the $42 level for all of August and September. So these sideways channels are really interesting if we were to break out and start moving higher. One other thing that really attracted me was GDX and GDXJ, which actually GDXJ is the junior miner ETF. And so we were talking earlier about small caps. And so GDXJ would be that equivalent. But the interesting thing is it pays a dividend of 75 cents annually. That's 2.53%. So imagine, working with the junior ETF, getting that potential upside. It had 3 nice days here in a row already. So it showed that it did attract, and it went up on volume too. So somebody's interested in GDXJ, and the fact that it's paying a dividend, 2.5% a year, not too bad. It's got an ATR of $1.34, volatility of 4.83% on the weekly. So it can be a good trader, and maybe something that you want to trade around a core position a little bit, especially since we're already down, half from its highs over the last year. Like, why not? I mean, what would you rather be in? Some tech stocks that don't make money either. I mean, they don't pay a dividend. They don't even have profits. Would you rather be in this that actually pays a dividend and is discounted and could possibly end up being a flight to quality? Hasn't been a flight to quality, but what if it starts to be?
Yeah.
So I want to throw that out there. I'm not making predictions. I'm asking questions, and also, bringing your attention to something intriguing to me, which is this whole space of commodities that have been hurt because of recession implications, and just a massive change in sentiment from obviously many years ago, where people, had valued gold much more than they do now. And I mean, I could bring this up to, people in the markets and say, hey, what do you think about gold? And you'd hear all the time, gold's, there's nothing. It'll never shine again, right? And they might be right. But what if they're wrong? It could be that people really get, again, underexposed to something that becomes a hot area just like that happened with oil.
Mhm.
Okay. So over to you with some seasonality for this week,
Yeah.
because we've got, tomorrow's the first trading day of the month, so there's obviously stuff going on there, and we found that seasonality has been pretty good. I mean, even with the fight with the macro, the macro stuff can exert a opposite force on it, but I've still found that seasonality is better than 65% of the time. Sometimes it hits 80, even 90%.
Yeah.
So I'm not going to argue with it. I'm just going to say, okay, let's consider what seasonality has to say.
Mhm. Well, for the month of October, the entire month, the spider is expected to do 0.79%. And if you look at these Russell, it's expected to do a little bit weaker, 0.28, and something like QQQ is a little bit better, 1.06. So that gives you a sense of how the entire month might pan out. But then tomorrow is the first trading day of the month, and it's expected to be for Spider minus 0.04. So pretty much flat for the Spider, with the Qs doing a little bit better and the Russell 2000 weaker. Some of the particular ETFs that you might want to be longer tomorrow are IBB, so biotechs, XLV, healthcare, XBI, right? So that could be something that's stronger than the market. And then things to be shorter are energy, XLE, XOP. GDX and GDXJ are expected to be softer for tomorrow for the first trading day, as well as financials via the KRE and XLF. And again, GLD, IAU, these are all gold ETFs expected to be softer for that first day. And then for the first Friday of the month, the Spider is expected to do 0.34%, with the diamonds pretty close to that, and as well as the Russell, all about the same. And the Q is a little bit weaker, but some of the ETFs to be longer are utilities, healthcare, energy, financials, biotech, oil, and shorter things that are more risky, like ARC-KK, the SMH chips. So just the higher quality ETFs longer on the first Friday of the month. We also have some key economic data this week. A lot of it's around manufacturing and jobs. So Monday we have the ISM Manufacturing Index, the S&P Manufacturing PMI, and on Tuesday we have a report on job openings. On Wednesday there's an ADP employment report and ISM services. Thursday initial jobless claims, and then Friday is the unemployment rate, labor force participation, and non-farm payrolls. So the big themes are going to be manufacturing and employment. The 10 years still hanging in there pretty strong at 3.78, the 2 years at 4.19%. And some key earnings for the week. On Monday, not too much. Tuesday, Acuity Brands. Wednesday, Helen of Troy. Thursday, Conagra, Constellation Brands, Levi's, and Friday, Tilray. So a smattering of corporate earnings in there. But I think the key is going to be manufacturing data, job report, and then again, how are we going to start this month? Is it going to be a continuation of the sell-off in September or not? And then, as you said, the global war risk, that's going to be a wild card out there of it.
Yeah, and I think that's one of the biggest concerns that's hitting us all the time. And then, of course, what's going on in Iran too. I saw that the rial is now 330,000 to $1. So 330,000 rial. Well, I think it's the lowest in history for the Iranian rial. So there's, they're the ones supplying all kinds of these drones to Russia. Mm-hmm. They're causing trouble. They cause a lot of trouble, Iran does. And now they got their own trouble on the home front with unrest. I saw your city of LA was a lot of marching in the streets there in support of the people that are protesting in Iran as well, right?
I missed that. I didn't see it, but
always looked like a few 100,000 people to me. I don't know. But anywho,
I was too busy looking at the gas prices out there. $7.
yeah, gas prices went back up, eh? Oh yeah.
Still around
So,
7.
with oil up, at the moment, the oil futures are up. Let's see here. What do we got? It was higher. It's backed off a little bit. 2.79% on WTI, 2.72% on Brent crude. So it'd be nice if it kind of backed for the open. I mean, it responded to this banter, which we've heard before, about potential 1 million barrel cut by OPEC. So, I mean, it's not for sure, and it's going to be 1 or 2 weeks before the meeting. I forget when the meeting is, but it's not due right away. But oil is responding in a positive manner, and I would like to buy some oil stocks. The problem is when they're gapping up so much.
Yeah.
So sometimes it's better to wait and watch the leader, or watch the ETF, and try to see if you can get a gap fill or a bit of a pullback before you buy. The other option is to go in with half the capital that you want, and then if it rallies, you're still got some skin in the game, and if it pulls back, you could buy the other half. But it's always hard when you have odds to do something. Let's say you curate some oil stocks that are supposed to be positive for the day, but then oil's already gapping up. The stocks are already gapping up. It's more challenging, right?
Yeah.
Okay. Well, I think we covered. Anything else on the agenda?
No, I'm kind of curious. Things like Tesla. So, I mean, they have record earnings reported this weekend. Will it continue to sell off on good news? I mean, that might be a tell as well.
But didn't they fail? They didn't deliver as many as the original target, right?
I thought they.
I thought they missed. Let's just put Tesla in here. Check the news myself. I thought that they missed the amount that they wanted to do.
It falls short. Yeah, Tesla deliveries fall short.
Well, and it was supply chain related, right?
Mm-hmm.
Why is he yakking here?
I mean, they got their robot also, and there's always news with Tesla, but
I don't know what he was bantering about. I didn't see it, but anyway, he does what he wants. But the thing is, yeah. So I mean, this is the whole point about headlines. You can grab a headline and act on it, and it might be not the whole story, right? So it's always good to kind of drill down, even briefly, than not. It takes time to read our articles in full, but at least go a little bit beyond the headline just to see if there's more substance to it. So, anywho, I'm gonna let you go. Okay, have a good day.